Nio can now be added to your ISA account on Trading212. But this product is not exactly like a Nio share, so in this video I'm gonna highlight all the pros and cons that you have to know before you buy this Nio product. It's Marco here, so let's dive into it. And first of all, I need to bring you up to speed on this product. So this is an exchange traded product called ETP, and this ETP that is tracking Nio, basically what it does, it's an ETP that tracks the US traded ADR. Clear as mud, right? Well, think of it like an ETF that tracks only one stock, and in this case it's Nio. And in even simpler words, it's basically an investment that moves alongside the fluctuation of the Nio stock price. And in just 1 second I'm gonna tell you all the pros and cons about this ATP, but I make videos on news like this one on Trading212 and FREETRADE, so that you're always up to date on the latest news on the cheapest UK investing apps. So now let's start from the pros of this Nio Tracker ETP. So first of all is that there is an exposure 1-to-1 at a fraction of the price, meaning that for each ETP that you buy from Trading212, Granite Shares buys the same equivalent amount of Nio stock. Now later I'm gonna tell you everything about what this means in terms of your rights as a shareholder and also about Granite Shares. And the pro of having a lower price is actually quite marginal, because you can buy fractional shares for Nio stock, and so that doesn't quite matter as much. But now let's move on to the next pro, and this one, guy, is very interesting, very juicy. You're gonna love it. Trade with your local broker in your currency, and this is very interesting, and I'm gonna show you that there are actually 5 Nio EPS. Yes guys, not 1 but 5, and each of them is based on a different trading currency. So we have USD dollars, obviously, GBP, Euro, and then the other 2 are Euros, but they are based in Amsterdam one, and the other one is based in Paris. Now, whether you would want to buy an ETP in a foreign currency, that is up to you. If you buy, for example, an ETP backed by the US dollar, it means that you are exposed to the fluctuations of value between US dollars and GBP pound, because obviously I'm based in the UK, and that's the kind of pair that I'm looking at. And so if you just buy the ETP, that is, in that case, you're hedged against inflation. And so in that case, it's up to you, whichever you find more suited for yourself. They all cost the same, and the cost is a con. Obviously, I'm gonna get to that later in the video, but now let's move on to the next pro. And another pro is that it's simple, traded like any other stock. But unlike a normal Nio stock, this product is ISA and SIP eligible, meaning that you can save money on your taxes, and that is obviously for the ISA £20,000 a year invested, and your gains are tax free. For the SIP, it's a completely different story. I'm gonna make another video about this, but at least you now know that you can put it in your pension, your SIP pension, if you want to. Now, another pro that is not listed there, because obviously that's something that I know because I'm always looking at FREETRADE and Trading212, is that this Nio tracking ETP is actually not on FREETRADE as of yet. And in just 1 second, I'm gonna go through all the cons, and boy oh boy, there is interesting stuff to go through. But please smash the thumbs up button if you have enjoyed the video so far. Now, the first con is something that you absolutely wanted to know. Obviously, the management fee, which is 0.15%, and that is in addition to the Trading212 forex fees if you decide to, for example, buy the dollar-backed Nio ETP. And so in that case, you would pay the 0.15% of the normal Trading212 fees and the 0.15% of this specific type of investment of this ETP, for a total of 0.3%. If instead you decide to buy the pound sterling backed ETP, there wouldn't be any forex exchange fees, and so in that case you can think that the Trading212 forex fees do not apply. So just bear that in mind when you make your own decision. Also, and this is very important, the 0.15% management fee is annual, and so that means that the longer you keep this investment in your ISA portfolio, so for each year that you keep it in your ISA account or SIP, then you would actually lose a bit of money and actually underperform the Nio shares. That's because obviously you would pay these management fees year on year and every time. However, think about this. In comparison, FREETRADE is still more expensive than Trading 212, but they do offer you a free share value up to £200 when you open an account using the first link in the description below, and when you then deposit at least £1 on the account. Get yourself a free share. What are you waiting for? And boy, if you have survived this far, guys, the next bit is gonna really blow your mind. That's probably the best bit of the video, so stick around. Now, the next downside is very, very interesting. You have no rights to dividends from the reference assets, and that obviously we are talking about the Nio Tracker ETP. And so with this kind of investment, you can kiss goodbye your dividends. But for Nio, obviously, if you know Nio as a company, you know that at the moment they are not even profitable, and dividends, it's not even something they are talking about as of now. They are obviously trying to become profitable first, sell as many cars as possible. They are really struggling with Tesla as well. So do I think this is a massive downside? Probably not. But let me know your thoughts in the comment section below. But the next bit and the next con we are gonna go through is this is actually quite bad, and I really want you to know. And the funny thing is that the only way to get to this next con is to go through all the documentations on these financial products, which I did, which is gonna be so interesting for you. So the first bit was you have no rights to dividends from the reference asset, nor you are entitled to additional rights arising from the reference asset, which is, and this is the important bit, such as voting rights. And so with this Nio tracking ETP, you do not actually have voting rights, which is, you know, something that you might want to get. For example, Nio had an extraordinary general meeting on June the 3rd, 2021. And okay, this is the article. I don't want to go through it, but just to tell you that Nio has general meetings where people get to vote on their biggest proposal. For example, if they want to dilute the stock, that's something that they have to put to vote, and that's something that you probably want to vote on as a shareholder. And when you think that the cons are over, guys, there is even more, and it's gonna be so interesting from now onwards. The first one is that these products, these ETPs, are actually very young. They just were launched in June, basically 15 days ago from the time of recording. So that means that we do not know how well they perform to track the actual Nio shares, the price of the Nio shares in the long run, because they only have 15 days of life. And to me, that is one of the biggest deal breakers, to be honest with you. But there is even more. What happens if the company selling these products, Granite Shares, goes bust or has any problems? That's what we are gonna explore. Now, Granite Share, and this is their website, so let's take it with a pinch of salt. Granite Shares assets under management stood at $1.5 billion as of the 6th of August 2020. The company was founded in 2016 by William Will Rind. But what happens if Granite Shares goes bust? That is very interesting. That's what I'm gonna show you right now. Let me read you the jibber jabber very quickly. The ETP securities may be redeemed prior to the scheduled maturity date, and that is if option number 3, an event of default occurs. And so to summarize what I just read, if Granite Share goes bust, you would actually get your money back based on the value of your investment at that time, at the time they actually go bust. And now the important question that you probably have already in mind: if Granite Share goes bust, it's because they don't have any more assets and they don't have enough cash to actually back up their investments, that's where the interesting bit is. And I'm gonna show you who is actually gonna pay. It's not gonna be actually Granite Shares, it's gonna be someone else. Cutting through some more jibber jabber, there is actually another company that is actually holding your money and they will pay you back if Granite Shares goes bust. And this one is, at the time of recording, Interactive Brokers. And at the time of basically issuing this document, Interactive Broker has got a BBB plus Outlook positive rating from Standard & Poor's. And if you enjoyed this video, you will love this other video where I review Trading 212 versus FREETRADE for the comparison of the UK cheapest investing app. So click on the video and I'll see you there. Guys, this video won't start on its own, so click on the video.